All this chaos on Wall Street is impacting people's wallets. For advice on how to weather this bear market, I want to bring in Joe Saluzzi. He is a partner and co-founder of the brokerage firm Themis Trading. All right, Joe, so should people even touch their investments or their retirement plans right now?
Well, thanks, Vlad, for having me, and thanks, Anne-Marie. I agree with you, Vlad, by the way, what you're talking about when, the wrong timing, when people will chase the market when it's high and they will sell on the lows. And there's actually an index, a fear-greed index, which is calculated, and that's towards the low right now, around 17 on a scale of 1 to 100. So that's extremely fearful. That means people are nervous and they might do the wrong thing. But I agree. If you have a long-term plan, and it all depends on your age and it depends on your risk parameters. If you are more risky and you're younger, you can afford to hang in there and buy more stocks. But if you're older and you're more around a fixed income and you're looking for that 401k to produce, and you have trouble sleeping at night, I think I said this the last time I was on with you guys, you should probably have pared back that portfolio by now. But right now, we're getting at levels where it's starting to get sloppy, and do you really want to sell here? And that's a question that you have to answer yourself.
So I got like a two-parter for you, right? The Fed is likely to hike interest rates. Now we're learning it might be a little higher than what we had thought, maybe even another hike in September. So I want to get sort of your take on how the Fed has approached this, and then also the Biden administration. Not that they can do an awful lot when it comes to inflation, but how the Biden administration has approached this.
I think to be honest and to be frank, I think they've both done a bad job. And there was a great article yesterday in the Wall Street Journal. It was titled "How the Fed and the Biden administration got inflation wrong." And the thesis of that article was that they're fighting the last war. They're looking at the playbook from the 2008, 2009 disaster, right? The great financial almost depression, and where everybody threw money at it. And the great experiment, which was concocted by Ben Bernanke and the Fed, was that we'll just buy our own bonds infinitely as much as we can to keep interest rates low. Well, they've stayed with that same experiment since then. And when anytime a problem hits, everybody looks to the Fed and says, "Oh, help us, bail us out, buy bonds, lower interest rates." They tried it again this time. And the problem is this time it's different. Coming out of the pandemic, folks were spending money, so they fueled it even more. And the great Milton Friedman, one of the economists, only the Fed can create this money supply problem. And that's what they did. There's too much money out there right now, which by definition will create inflation. And now they've got a big problem. How do you get out of this inflation problem without causing a recession? And that's where the market's so nervous right now.
So the new producer price index came out this morning, as you know, and that figure has gone up 10.8% over the past year. Explain to our audience what this number means and how it affects the economy.
Yeah, it's hot, as we call it on the street. That's a strong number. That's a high number, although it's slightly better than last month. So what people are looking at, the producer price index is more, down in the manufacturing channel. What are they seeing on prices? Where the CPI, which we saw last week, was on consumers and what they're feeling. But what Wall Street and investors are looking for is this number to start to decline. So all we've seen over the last, 5 to 6 months is it going straight up. And we need a decline. The people that's termed peak inflation, have we seen it yet? And the answer is no. And that's really concerning investors. When will this stop? How high will prices go? How much will gas go to? How much will milk go to? How much will bread go to? And it's still undetermined. So I think that's why we're going to continue to see nervousness in the markets and continue to see investors, I hate to say the word panic, but yesterday was a disaster in the stock market. And I don't think that's a one-off to come.
I mean, I knew you were going to say that, but so it's always hard to hear. And I know everyone says don't look at your 401k, but it's still hard not to.
People invest based on their emotions oftentimes, which is why you use a financial planner or an advisor to help you temper those emotions, because when you're emotional, you sometimes make a decision that could have long-term
Here's the thing. I'm not going to do anything. I don't even know why I look. I'm not going to change anything. I don't know anything about it. I just look at it. I feel terrible.
You just look at you're sad.
I put my phone down, and then I'm like, let's ask Joe some questions.
I can tell you guys, what we're seeing on our desk, we trade for institutional investors. So my clients are pension funds, hedge funds, mutual funds, and we're not seeing panic. Right. We're not seeing folks come in saying, sell, sell, sell. In fact, I was buying yesterday for certain clients who are looking for more value. So professionals are in the markets. They're not going to panic. Unfortunately, if you're a retail trader, not investor, a lot of them are on margin. So they're being forced out because they have loans out there to buy stocks that are now going to be sold out by the brokerage firm. That's a whole different story. That's a much more dangerous game.
That's so true. And we get into Bitcoin territory.
Oh, boy, please don't.
Joe Saluzzi, thank you so much.
Thanks, Joe.
Thanks for having me, guys.